Hello ladies and gentlemen, it's Uzaifa Farouk here, and I thought I'd shoot a quick video. Maybe not be quick, it might not be quick, but I just thought I would show you recent market trends and kind of show you the 15-minute strategy, kind of reaffirm everything that I've been showing you in terms of price action, support, and resistance. And I'm also going to emphasize the stochastic in this training as well, and when you should and when you shouldn't trade in terms of price action mixed with the stochastic indicator. Now, you don't even need the stochastic, but it is a very good tool if you are looking for short-term trades. So let's get into it. What I have here in front of you is the Euro JPY. Now Euro JPY, I'm just using it because it's been going up and down and has some pretty good volatility. So I want to show you what you can do in terms of price action and what kind of trades you can place. Now I have the 5-minute chart open. Personally, I use CT options until I find a better broker, and I'm thinking of moving to, I think it was RB options or something. But I'm going to stick with CT options for now, and I'll get back to that later. So let's just go through kind of the day and what we found in terms of price action and what kind of opportunities were present here. So remember, whenever you see random movement, okay, now let's say, I mean, you can start off at any point in time during the day and see different types of movement. But if you don't see anything approaching support or previous support and resistance, then just watch and see what happens. Now, at the same time, also, I know in previous videos I've kind of emphasized that 5-minute chart. You know, you can take 15-minute trades, but I've also found that it's even safe to take, you know, half an hour to even an hour trade, because remember, 6 candles after your current candle is 30 minutes worth of trading. Okay, 30-minute trade. 12 candles is an hour trade. So you can take 15 or 30 or even 1 hour trades if you feel sure about the movement. So for example, I'm just going to pick a random time and I'll go in time as I proceed. So let's just take here, for example, this came down here, and as you can see, it bounced off pretty sharply with a very strong bullish candle on this side. So you draw a support. Now remember, you don't have to be exact on, you know, the close or the low or anything. Just try to touch as many candles as possible. So this came down here, created a wick, and it also touched this candle and went up. So I drew a line so it would touch this candle and this. Okay, so it touches both. And then when it came down here, now here as well, when it came back up here, you would put a line in over here, because then it would touch this candle and this candle. So it's touching 4 candles. You would put a line there, and you would watch to see what happens when this candle comes. Now if you see a big wick like this, then you know you could, if you wanted to, place a 15 or 30-minute trade, and you would have been in the money, because remember, old support is new resistance. Not all the time, but depending on what your candle looks like, it is likely for that to happen. Now you have to be patient for these setups to occur. Now remember, don't exhaust bounces. Exhaust means if it bounces once, bounces twice, don't expect it to bounce a 3rd time, 4th time, 5th time. It'll eventually stop it all and break through. Okay, so what you want to do is draw your previous support, and when it breaks that support, make sure you watch what the candles look like when it comes back to that previous support and it hits resistance. Alright, so it came down here, it hit off this. You could have placed a whatever, let's say you take a 15-minute trade, you would have been in the money on that one as soon as this candle opens. Okay, now remember, you can be a touch trader or you can be an open close trader, but if you're less risky, you'd be an open close trader. Alright, so you'd wait for this candle to open, and right here you would take the trade, and it would have won in the money right here. 15-minute candle. Excuse me, sorry, I'm a little gassy right now. If it was a 30-minute candle, you would have been all the way down here, so you would have been way in the money. Okay, and now you're watching to see what happens when it touches this right here. Okay, this old support, and as you can see, you see a what looks like a hammer candlestick right here with a big long wick, and you could have placed a trade for 15, 30, whatever minutes, and you would have been obviously in the money no matter how long you placed that trade. And then you watch again to see what happens when it comes here. Now remember, this doesn't show a big wick, so it doesn't mean that it's not going to reverse. It just means that your confirmation, it's less probability trade that it's going to go down. And although it went down, you can see that it didn't go all the way down here. So it started kind of a up, down, up, down, up, down, up, down, up. So it's making higher lows, okay, and higher highs. So right here, it kind of burst back up there and it went past it. All right, and it created a new high and it came down. All right, so then if you want to leave your, if you want to take your support and resistance lines out when it breaks, that's fine, and you can create new support and resistance and then kind of analyze what happens when the candles reach that point again. All right, so as you can see right here, now I'll show you why I'm drawing it here. Let me remove this. I'm drawing it here because this is the most amount of candles. This line touches almost all the candles you see here. See, touches this, all points at which it was kind of bouncing off of. All right, now you keep that drawing there. In fact, actually, we could probably put it here to make this candle touch as well. Okay, let's put it here. So now it's touching even more candles. It's touching this. All right, without penetrating the closes of the candles. Okay, so it comes down here, it doesn't touch. Now if you're more risky, you could take these trades, but if it doesn't touch, you can be very conservative and say I won't touch it, and I won't touch the trade unless it touches the line. All right, and then you're watching to see what happens. It doesn't touch here, so you leave it, and then you're watching here. See, it touches here, and right at this touch, you could have placed a 15 or 30-minute trade, and with a 15-minute, you may have lost if you had taken it at this open. You would have been here, but if you'd taken a half-an-hour trade, you would have been in the money. Now, in terms of stochastics, okay, now when it approaches support and resistance, watch your stochastics and see if it's overbought or oversold. And now setting wise, you want to keep it at 12.3 if you're taking if you're using the thinkorswim, or you want to use 12.33 for MetaTrader. So then see at this resistance here, it was overbought, so eventually it's going to come down. All right, you just don't know how far it's going to come down and how long it's going to come down for. All right, so that's why you want to be a little conservative. Okay, you want to use a minimum of 2 to 3 candle expiries. Okay, so 2 to 3 candles, usually 10 to 15 minimum expiries. All right, especially if they're ranging and especially if the bounces have been vast. So see here, let me give you an example where the bounces weren't vast. So here it kind of bounced up sharply. So this is a good point that it would bounce up again. All right. Let me show you another example where it wasn't a big bounce and it wouldn't bounce up again. Okay. So here is a good example. It bounced from here and it went down all the way back to the support range, and then when it came back here, it did bounce off sharply. But see, it resisted this area. Although it still remained under this resistance, you could do a range, if you want, a range binary option and say that it's not going to go above this line for a certain period of time. All right, but regardless, you can just do a 15 or 30-minute put, and you can do that. Now you can make a rule, make your own rules, but remember to base it on what the current candles look like and what the current market is doing. For example, in terms of timing is the hardest part to get in binary options. All right, it's going to go up and down. You know it already. That's if you're at least a bit knowledgeable in binary options, you know that it's going to eventually go up and it's going to eventually go down, and you're going to be right majority of the time. You just don't know how long it's going to do that for, because you could place a binary option here and tell me that it's going to go up, and sure, it did go up, but look, it doesn't go up. It goes up, down, up, down, up, down. So maybe you timed it incorrectly so as to when it expires, it comes down and it closes right here, right under where you purchased your binary option, even though it went up. Okay, so you got to be careful and place your own rules. You will not win 100% of the time. You want to win 70 to 75% of the time minimum. Okay, that's your goal. And price action will help that for you. Just follow these rules, all right? And then you see this line break, all right? Now, you take the highest point at which it now you could use the wicks. Okay, I've found that the wicks work sometimes, especially when it breaks. When it breaks a range, you can put a resistance on the wick, or you can, or you can put it at the close of the highest candle. Okay, so you can put one near here. Now, if you see a candle come up here and touch the wick support or wick resistance of the old support and the new support, then next time it comes here, you can place another call option knowing that it's going to come up. Okay, and that's exactly what it did here. All right, you can do a touch or you can do a close. Regardless, you would have won. Okay, and now you're placing more and more support and resistance. Now you're putting one here, and you're putting one here, because remember, old resistance becomes new support one, especially when it breaks. Okay, let's get rid of this. Okay, and keep a track of stochastics. The stochastics in ranging markets don't work the way you want them to work, because when it breaks, it stays above the overbought. Okay, and as soon as it kind of goes down, see, it doesn't go down all the way here, where, see, this part right here was all the way here, the candle was here during the stochastic, and the same level stochastic is all the way up here. Okay, so what it's doing is creating new levels. All right, so now it breaks here. See, when it comes up here, it came down here. This candle was not really indicative to me that there's a wick or anything like that, but this candle is, because it's showing me that, okay, the market is undetermined. Even though this came down here, the bulls and bears are fighting. But this is a strong area of old resistance, which could become support, and you can make another call option right at the opening of this and win it. But remember, we're talking in hindsight, so of course it's easier said than done at this point. So let's take this out and see where our new levels are. I'll bring this back here. Okay, so it's coming up, and then it bounces. So you can put it at the wick, or you can put it at this candle right here. Kind of let it go to that level and see what the price action looks like. All right, so it breaks through, and now you're watching to see what it looks like when it comes down. Okay, now see this small, what this means is there's a big candle and now there's a small bearish candle. They're getting smaller and smaller, meaning there's a chance that the bulls might take over. And look at what happened. Okay, it's taken over. But see how it bounced off from here, came down here, bounced off from here. So you can take this if you want and adjust it so it touches this point. So next time it touches, you can consider taking a call option. So see, it bounced off here when it did, and it came down here and touched it again. You could have taken another call option for 10 or 15 minutes and you would have won it. Okay, and it bounced off again, and now it's just creating new levels. So you want to put the high here, even though it might or might not touch again. Okay, and you're keeping track of, see this? This was the old range. So it came down here, bounced up, came down here, bounced up a little bit. So it's showing that this is a level right here. So when it breaks it, you want to watch what that level does again when it comes to this section. See, when it touched that section, it will continue down. So remember, old resistance becomes new support. Okay? Previous price action leaves clues. So you could have taken a 15, 20 minute, 30 minute option. You would have won there. Again, over here, it broke, and then it's showing over here that it's showing a little bit of resistance. Okay, and then it breaks that resistance, and it continues on. So now we want to create new drawings. Okay, so we have a drawing here. We have area of resistance and support over here, and right here. Actually, we'll take this one out, and we'll use this right here. Okay. We want it to touch as many candles of resistance as possible. In this case, it's this right here. Okay, and it touched here. So now we're watching what happens when it touches this and it touches a support. Okay, there, it touched it, and right at the touch or at the close, I mean, because this is a huge wick. And if I was a open close trader, I probably wouldn't have taken this trade, because look, it already came down all the way here. So the next candles could be coming up again. So I wouldn't have taken that trade. Okay, even though you would have won it, even if you're an open close, you would have won it. But if you're a touch trader, you would definitely would have won it as well. Now, if you're a touch trader, don't do an expiry for the next candle. Do it for, you know, the 3 to 6 candle rule that I just told you about. So if it touches, do a 15 or 20 or 15 or 30 minute or an hour option. Okay, so in this case, it would have touched. Let's say the first touch was right here. Okay, so touched here, and 3 candles in, you would have been in the money regardless. Even if 2 hours later, you would have been in the money, because remember, you know, this is the area. Actually, you know what? I take that back, because we established this resistance based on this candle action here. So this, when this happened, you wouldn't have established this line yet. We established this line at this point. So anyways, let's just continue. When it came down here, you could have been watching what it looked like on this side. Okay, and as you can see, actually, we'll move this up so it can touch more of the drawings. As you can see, if you were a touch trader, it touched the first time here, all right? And you know that this might be an area of support again. So when it touched here, you do a 15-minute, 30-minute call option, and look, you would have been in the money. Okay, and then this area has been established. So you're watching to see if it touches this section. And right when it touched this section, you could have done it 15 or 20 minutes, and you would have been in this in the money right there again. Okay, so now you're watching this again to see if it touches and what it looks like. Okay, didn't quite touch. It may have touched, but didn't quite touch in my books. Let me see here. The low was 8.9, and this is 8.6. So it was close enough. Some of you may have taken that trade, but 8.6, and if you were a touch trader, then you would have barely been in the money, but in the money nonetheless. Okay, and it breaks. So now when it breaks, let's adjust this a little bit. So it come down here. Okay, when it breaks, then you want to watch to see what happens with that price action. See, now there it touched there. This has to be adjusted actually because now they created a new range low. Oops. So I'm gonna put it right there where they all touch, and then see and notice how previous price action is. It's making lower highs, so you may kind of think that this is going to be a downtrend now, but you have to wait to see what happens with the price action. Okay, it touches that, and it's just kind of just ranges. It's just kind of ranging and doing some random stuff now. So regardless, let's just say this candle wasn't big enough to take, but some of you may have taken it, including myself. So at this touch right here, if you had taken a 15-minute option, 1, 2, 3, then you probably would have lost. But depending on the timing, you would have been somewhere here. You could have been somewhere here. Taking a half an hour, you would have been down here, so you would have won. Okay? So keep that in mind. The timing is everything. All right? Okay, and then now we want to create new lines. All right? So let's take this line and kind of adjust it to here. Okay, so now we're looking at this, and let's adjust this to the new low. Okay, so now we're trying to find what price action is going to be like. Now it touched. If you're taking a put option there because it touched, but remember this did close right at the end, right above the old resistance. So if you're an open close trader, then your rules is that you're not going to take this trade. But if you're a touch trader, you would have taken that trade already. Let's just say for 15 minutes, and you would have lost that, all right, because it broke, all right. But remember, a lot of these trades you already won. You already won. Let's just say about 6 of these trades already. So 1 or 2 losses is still keeping your win rate at above 70%, which is really good. You're still profitable. Alright, so this was the old resistance right here. So you're watching for price action as it approaches this line. Now, you don't want to take every single trade. So as you can see, it kind of resisted off this line. So we didn't take that trade, but what we're going to do is we're going to adjust our support and resistance so it touches that line. So next time it touches that line, we're going to see what price action looks like. And we also touched this, and it keeps bouncing off. So now let's see. Even though this is a small range, we're just watching right now. Okay, we're watching to see how price behaves here. Now this is a pretty big wick on that side, so I'd expect it to go down a little bit, which it did. But if you did a 15 or 30 minute, you would have been out of the money. But as you can see, this is going towards an uptrend. So see this downtrend, lower high, lower high, lower high, lower high, lower high. It broke. See, this downtrend broke, meaning that downtrend right here has probably ended. So you got to be careful if you're taking put options after it's broken this right here, the lowest high from the previous. Okay, and it broke at this point. Okay, so it comes down here, and then you remember, because it broke, you don't want to go against the trend necessarily, only if it's a strong area of support or resistance. But right now it's against the trend. If you're taking this trend for a 15 minute, you may have actually won depending on when this candle touched this line right here. Regardless, let's say that, okay, so anyways, it went up and it created a new high. And I think this is probably time of news. This is 4 in the morning, 4:15 in the morning. It may have been time that this was news. So let's adjust this and create our new highs and new lows. Okay, new high. Now we're watching to see where this stops. If it touches this line, if not, then we adjust that line. Okay, so it touched that line and went down. Wow, look at that drop right here. Wow. See that? That was probably news as well. So now we're waiting for price action to kick in and see where it's resisting, where it's supporting. Alright. So let's just remove all drawings for now. And oops. This is where the last one was. This was a point of resistance and support. Resistance here and then support here. So we'll keep that. Okay, now we're watching where the resistance is and support. Okay, so see there? Actually, not yet. We'll draw a line here. And we'll adjust this line to here. So it touches most of these candles right here. And then completely faked you out and went the opposite way. Alright, so now we're watching this resistance area. So if it touched this area, came close to it, you could have taken a put option. And you probably would have lost that one. But then see, it does come down. So what this created a new high. Okay. And then let's remove this right here because it kind of, it killed that trade. And then we're watching. Okay, so it's looking like there's a little bit of support there. Keep watching. Okay, so it broke that. Look at that, how that broke it. All right. So now we're watching it to what it looks like when it comes down here. We got a new high right here. Okay, so then right when it touched, you could take a put option again. And be careful, remember this is an uptrend now, so taking put options is risky. So you only want to look for old support. So see how this works right here is this came down, touched the old resistance, and it was straight up towards the way of the trend. So this is a really good trade to take. All right, if you're a touch trader. And now you're watching for the highs. Okay, let's make it a rule of thumb not to take opposite trades now. Okay, now you don't want to take any trades here because remember it would be going against the trend. All right, you don't know if a reversal is happening. Now look at the stochastic; it's staying above overbought, meaning eventually it's going to go down, but it's going to level off. Okay, it's going to create new levels and level off. Now we're watching to see if it creates a new support. Okay, so right here. Okay, so see how old the resistance became new support here. You could have taken a 15 or 20 or 30 minute trade and you would have won, and it would have been, in the way of the trend. Now watch here. See this? It's kind of leveling off. It might not go further than this, and see how the stochastics created a new level. So see this, the last time it was here, it was all the way down here when the candles are down here. It was at the same level. Now it's all the way up here, and now it's in the same level, meaning it's creating a new level by which stochastics is going to create its calculations. All right, so now it's just bouncing up and down from there. Okay, until it breaks this trend, you don't want to take any trends opposite of the uptrend that it created right here. Okay, let's just remove all these drawings. Way too much drawings right now. Okay, I'm just going to connect all these. Okay. Okay, it's just creating new highs. Wow, it's just going up and up and up and up and up. Okay, you don't want to go against the trend. Now let's see if they create a new support. So it's kind of bouncing off of here. Okay, now you're just watching again. Now I hope you guys are seeing how the patterns. See, it's kind of breaking, but it might just go opposite. Now you want to kind of watch until it actually breaks this higher low. And that's when you know the trend is over and we're going to begin a new trend. So it hasn't done that yet. Right now it's just ranging. See, it hasn't broken this area right here, which is probably the last higher low. Okay, so let's remove this. We're tracking the range to see where it's bouncing from. Okay, we're still watching. We're watching. You need a lot of patience in this binary game, this Forex binary game. Now we're watching to see if it's breaking. Okay, and that's the current day. Okay, now this is the current range. Now you can while it's you're waiting, you can just adjust and create new lines if you want to see where it'll go next. All right, now you can take 15, 20 minute options and you'd be good to go. Honestly, like it's not rocket science. You just need to win 70% of the time, and you already are 50% right or wrong anyway. So, let me see if I can take you through some more. Okay, now let me show you another uptrend right here, or let me show you a breakout. How a breakout looks. Now, personally, if it ranged, now this is a range right here, lowest part of the range and highest part of the range, and if it broke out above or below this range right here, you would take a call or put option. But I would never take a call or put option just because it broke. I would wait for it to retrace back up and see what the candle looks like, and then take a put option depending on what the candle looks like. Now, if I had waited, see, it would have seen that the candle penetrated that, it faked you out over here, penetrated that, and then it broke out here. Alright? And then that's when it started ranging here again. And they created it. It's creating a new range, and then it's breaking out. See, when it broke out, that's when you can take a trade. Okay, and then see, you can see price action work here. Now, it came up here, broke that range over again, and then it came down here. And as you can see, the candles eventually they're going to go up. So you can wait for a red or as close to this line as possible, and they do a call option for whatever expiry you want actually, and you would have won that. Now watch these ranges. See how the uptrend works. It comes down, penetrates, comes back down here, penetrates, comes down here. Old resistance becomes new support. See, it's right here, right here, right here. Now, if you're watching the markets, I mean, you can take all advantage of all these opportunities. It's not even an issue, right? And see that? I mean, it just keeps respecting that boundary over there. Now, when it penetrates a little bit and it continues in that range, you do want to adjust your lines to accommodate that new kind of range. Okay, so nothing is 100% exactly in a certain place. It's depending on where most of the price action is. All right, now look at it. It's just bouncing off these levels. I mean, you can take trades there all day long, and win a crazy amount of trades. Look at that. See, if you're a touch trader, I mean, you can make a lot of money doing this because look, as soon as it touches, it's always above that line that it touches. All right, until it penetrates, like 5 hours later, and it breaks and creates new levels. See, this is fun shit, man. This is fun shit. Then you go down, take this out, and you just watch price action again. Okay. Now, I know it's a lot of drawing, but they're just lines, man. Lines. I think you'd sacrifice lines for a little bit of money. So see how he created this, and it's just kind of bouncing off every time it touched it. You could have taken touch traders could have taken that trade. Okay, and it just keeps doing that over and over and over and over and over. See, touch, 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 touch. Beautiful. Beautiful. Hope you guys get my point here. Understand this ain't no game. Okay, I was trying to not make this video too long, but when I get into this, I just get into it. So see, now you're watching price action. See, when it came down here, and it came down here again. You could have taken all these trades, man. Oh, this is just so fun. Touch here, it would have won. Touch here, would have won. And then touch here, lost, but touch here, won. Okay. This is amazing. Now, remember, it's very important you watch the candles to see what they look like. It's very, very important to do that. Candles show everything, especially if it's going down and it's coming and approaching an old point of support or resistance. When it approaches that, watch the candle. If the candle shows a big, nice, long wick, then it's a higher probability trade that it's going to reverse and you're going to be right. All right? So that's the video. This is just a reiteration of what I usually teach in terms of price action, but I wanted to kind of take you through it again and re-emphasize this is how you can trade these strategies. You don't need other people telling you when to take trades. It's good to have. They'll kind of point you to a currency pair for you to watch out for, but at the same time, you don't need it. Anyways, hope you guys enjoyed this. If you guys liked it, make sure you press like and comment on the YouTube video, and I'd really appreciate that. Thank you.